You must have heard of MACD go cross and dead cross. If you follow these simple operations, the probabilities is high. Today, it is difficult to make profits. I will tell you really reliable method of using MACD. Remember that the most important things of MACD is to judge buying and the selling point is to look at the zero axis. And we can use the zero axis together with the moving average system, which is one of the indicators. The line in the middle of the MACD line and the columns is in the go cross. The go cross is when the fast line and the slow line are in the same directions. Crossing the slow line offline and crossing the slow line offline is the formation of the dead cross. Next, let's see that when both the start and the slow line are below the zero axis, no matter how many go cross are formed, don't participate normally at this time. Because as long as the enter so many of the go cross, the stock price will still fall at the way. Being caught in it is because most of them are small rebounds. With the little value of participations, if they enter the markets with the bottom hunting mentality, it is easy to get caught. You must wait until the MACD double line stand on the zero axis. So where is the time to enter the markets? When the MACD bottom lines draw back to the zero axis again but does not follow below the zero axis, then the go cross at these positions is the safe buying point. That is, the go cross above the zero axis. According to this formula, we can accurately buy before the sharp rise. It can be seen that the gain in this wave are very impressive. Let's look into the Tesla daily chart from the end of 2022 to April 2023. The wave of rise in the front of the charts is fast pull-ups happens after the MACD double line crossed the zero axis. And then there was a dead cross. The stock price will have some adjustments. The positions form a go cross. We can participate in average positions. But later MACD lines is not very good. The upwards movement quickly form a dead cross. So at this position, we must pay attention to avoid risk. We can also see that the stock price rebound upwards. But the previous high point of the US dollar 217 did not break through successfully. So it can only be choose to go down and go down. The position of the gaps in this previous will form an important support. Once the support is in an important position, the effective stock price stop falling and close positively. And the MACD form a go cross again above the zero axis. It may be positions of considers next time. But if the MACD double line is running below the zero axis, then we must pay attention to the risk greater than the returns. Let's look at these pictures. The zero axis in this figure is very obviously and the stock price rise sharply. What positions is it? When the MACD double line crossed the zero axis, here is the first go cross above the zero axis. After entering the markets at these positions, you can successfully get a large profit. So for the friends with the stable investment, the zero axis is the entry point as the positions of the first go cross above is safe. Let's look at these charts. The trend of this wave of January to April 2023 is very clear. Almost after MACD crossed the zero axis, it has been stable running above the zero axis. Means that the stock price is in a strong upwards phase. If the friends who missed it before, is this the best positions? We will see the MACD double line above the zero axis to form the first vendor. It is a go cross. It is very good and safe interventions point. Entering the market from this point and pulling up will also a good returns. Also, if the dead cross is above the zero axis, don't rush to sell. Why? We can see here many large and the small dead cross have formed, but the stock price has only fall slightly and there is the big wave of the rise. These are all the dead cross above the zero axis. So how to judge when it should be sold? Let's look at this stock. At the zero axis, there is a lot of the dead cross on the tops, which are actually small adjustment, which belongs to normal flush out. So after the adjustment, they will generally continue hit the new high. The dead close after the top divergence of MACD are the position to leave. What's this top divergence? The stop price is getting higher and higher, but the MACD has not reached a new high. Usually, when there is the second divergence after the first divergence, you can choose that profit and get out. According to these methods, we can successfully sell at the high point of the stop price. For example, the previous stop price was high. It hit a new high, but the MACD go flat. This is kind of divergence at the tops, which remind us that there is a risk. When should we leave? Then there is a divergence at the top against. Then we have to leave at these positions, and then we can avoid a large increase. Looking at the decline here, the stop price is also hitting a new high, but the MACD is indeed falling. We can use the positions of the dead cross and the dead cross to find the two dead cross are lower than the others. This is an obvious top divergence with the stop price. When there is the dead cross, so we can choose lighten up or get out at this position. After leaving these positions, the 60% decline can basically be avoided. For the MACD zero axis, everyone should pay attention to the gold cross and below the zero axis. There may be some rebound as the sign of stopping is the decline, but the rebound can be more or less, and you cannot rebound. If we are not sure, we try to wait and see. So set a stop loss for the small position and take a gambler small rebound. Generally, have no big chances. But when the dead cross is formed below the zero axis, you must quickly leave the dead cross below the zero axis. This is very dangerous. If the dead cross above the zero axis, don't panic. The dead cross above the zero axis just mean that this is a callback. In the flush out, if there is the dead cross come after the top divergence, we will leave the false signal of the MACD indicators gold cross and dead cross. In addition to using zero axis to judge the magnitudes and improve the probabilities of analysis and decisions making. The gold traps, the cross trap of MACD can also use to moving average system to avoid it and further improve accurately of MACD. If the moving average shows a wrong term of arrangements at these times, the dead cross of MACD can be considered as a callback in the upward trend of the stock price or the main flushing actions. Don't be afraid on this. When MACD appear gold cross, it means that the end of the stock price corrections will continue previous upward trends. At this time, we will continue hold for a rise. Let's take a look at the performance of NVIDIA August 2022 to April 2023. How to avoid the trap of MACD gold cross and dead cross by wave or pull up. First of all, everyone is very clear in these pictures. If the follow-up is not timely, the big profit from 130 to 280 will be missed in the later periods. So how to avoid it? We can see in the pictures that although the stock price have fallen sharply, it's a kind of wash, which obviously used by us. The direction of the moment of the median and the long-term moving average is always upwards, which means that there is no problem with the trend. This is only the short-term adjustment in the middles at the same time. The MACD double line is above the zero axis. Above the zero axis, this is also the sign of flush out. So we can wait and see for the time being. For example, the positions of the bags has 3 consecutive negative and many friends have been wiped out. But the days of you just left, there is the big gap and high drive at these positions. We found that the medium and the long-term moving average system is also a upward directions, but the short terms of moving average have a short-term pullbacks. At the same time, MACD is above the zero axis. Although there is the dead cross, we treat it as the flushing. The rise will not flush out, so that we can effectively avoid false frequent trading signals and maximize profits. For example, look at the stock in the pictures. It is stock with the relative large fluctuations in up and down. And it is also a stock that many retail investors compare difficult to control. Once there is drastic or large-scale adjustment, it is easy to be wiped out. How can we avoid it? With the help of the long-term arrangement of the moving average system and MACDs, although there have been many stock price callback in the past, they all stopped falling and close positive at the medium and the long-term moving average. And the MACD is always above the zero axis. Therefore, we can accept every callback of this kind of the dead cross. Once the dead callback is over, this is where the gold cross will start next time. So how to identify when the moving average in the short positions when arranging? If the MACD show the gold cross below the zero axis, it only indicates a rebound in the downwards trend. At this time, don't to be optimistic. The rebound is over. It will probably continue to follow the original downtrend and continue hit the new low. If you have to do it, it is recommended is that to take a small amount of the money for short terms and set the stop loss and run it if you make a profit. Let's take a look on the Tesla trend from the September 2022 to the end of the year. Basically, every time the MACD zero exists below the gold cross, the stock price will have a sum of the small rebound. But the premise is that the short positions is arranged. Every time the rebound ends, it continues to hit a new low. Let's take a comprehensive look at the moving average system and the zero axis of the MACD. If the moving average system show the short positions arrangement, then the gold cross at this time is just the rebound. If the moving average show the long-term arrangement, then the dead cross at this time only represent the callback. Of course, the MACD indicators can also use in combination with the other indicators. Friends who interest in the actual combats of escaping the tops can click to learn today's MACD high probability strategy. I am Alex, a stock trader who loves to share stock trading ideas. If you like the content I share, kindly hit the subscribe buttons now. Then you will not miss any content I share later on. See you again in the next video. Bye.